In the recent past, two devastating economic triggers have converged on the Indian economy. First, the 50% Trump tariff is crushing India's exports to its biggest customer, the US. Second, new US sanctions are simultaneously choking off cheap Russian oil that was saving India billions of dollars. This is not a forecast, it's happening right now. Let's try to connect the dots on this deliberate double attack and see why the Indian rupee is now on life support. And how will this drastically impact your finances? The real problem isn't just the rupee hitting an all-time low of almost 89 rupees per dollar. The problem is that these are not two separate random events. They are a coordinated move designed to force India's hand. And as usual, the young Indian professional is the one who will pay the price through imported inflation and job uncertainty. So let's look at each of the attacks and figure out what it means for us. Let's start with the first front of this attack. A new report from the Global Trade Research Initiative just dropped on November 2nd. It's a smoking gun. It confirms that India's exports to the US have plunged by 37.5% between May and September of this year. This isn't a slowdown, it's a collapse. The cause? Trump's 50% tariffs, which went into full effect on August 27th. And the stated reason is insultingly simple. The administration explicitly said these tariffs are a penalty for India's continued purchase of Russian oil. Smartphone exports are down by 58%, gems and jewelry by 59.5%, solar panels by 60.8%, and so on. So just to be clear, the US is punishing India for buying cheap oil by making it impossible for India to earn the dollars it needs to buy any oil. And this is just attack number one. Now let's look at the second attack. Just as the US is punishing us for buying Russian oil, they have also decided to make it impossible for India to access it. On 22nd October, the US and UK imposed major direct sanctions on Rosneft and Lukoil, Russia's two largest oil companies. The deadline to stop all transactions is November 21st. That is less than 2 weeks away. Now you might think India would call the bluff, but that is not what is happening. The US said stop and India's largest refiners are complying. Reliance Industries, MRPL and HPCL, which together buy over half of all our Russian oil imports, have all confirmed that they are halting or reducing direct purchases. They are not risking multi-billion-dollar sanctions. The result is immediate. Russian oil imports went down in October. The oil discount is gone. The cheap energy lifeline that shielded India from inflation is being cut. This is the perfect storm. On one side, attack 1 means our exports are collapsing. The dollars coming into India are drying up. On the other side, attack 2 means our oil imports costs are exploding. We are losing the Russian discount, so now we have to buy more expensive oil from the Middle East or the US. So, fewer dollars are coming in and more dollars are going out. What happens when demand for dollars spikes while its supply collapses? Indian rupee becomes the victim. As of this week, the rupee is trading at 88.63 per dollar. The RBI is in the market, desperately burning through its forex reserves to defend the 89 level. But it's trying to stop a tsunami with a bucket. This isn't a market fluctuation, it's a deliberate two-pronged policy attack. This isn't just some abstract geopolitical game, this is eventually going to hit your personal finances as well. Fuel would get costlier. Foreign investors may decide to withdraw even more money out of the Indian markets, so it might affect your stock portfolio. Also, a weaker rupee means everything you import gets more expensive. Your petrol, your electronics, your foreign education. It means imported inflation, which means the RBI can't cut interest rates, which means your EMI interest rates stay high. The first step to protecting your wealth is to understand the architecture of the prison. Now you do. Your action item is to reevaluate your US dollar and US market exposure. If you've been waiting to invest in the US market, this high dollar environment is a problem. If you've been relying only on Indian stocks, you're exposed to this rupee weakness. So introspect and reevaluate your investments. I'll see you tomorrow.